All right, good morning, everyone. It's good to see some of you hopping on board. I know that we are about 2 minutes away from the start of the call, but I just want to say hello. I'm Christine Brown. I'm the Director of Member Engagement here at the Reno Sparks Chamber, and it's my pleasure to be able to host this call today as part of our Chamber EDU Extra Credit Series. Now, I know that I'm preaching to the choir a little bit, but Chamber EDU is our fall workshop series, and Chamber EDU Extra Credit are exactly that. They are extra credit webinars that we're offering as auxiliary educational opportunities for members aside from the workshops themselves. And they range on all kinds of topics. For instance, today on banking and COVID-19 considerations when considering your banking options. And then also we've got some upcoming EDU extra credit opportunities when it comes to diversity and inclusion. And anti-racism. We've also got a workshop coming up when it comes to mental health in the workspace. And we know that that is probably going to be appropriately timed toward the end of November. And we're thrilled to be able to offer as many useful tools as possible in order to help us get through this season. So with that, it's 11 o'clock. So without further ado, we will go ahead and get this call started. Once again, I'm Director of Member Engagement, Christine Brown, at the Reno Sparks Chamber. And I'm joined today by two guests from Plumas Bank. I've got Ty Nebe. Hopefully I'm saying your name correctly, but I'm sure that you will say your own name correctly and you'll be able to let us know. And Mike Hicks. And they both, again, are with Plumas Bank, and they're going to give us a presentation first on some COVID-19 banking considerations that are going to be important for you in this coming season. And we'll go ahead and close out the call with a little bit of Q&A. So just as a reminder to everyone, if you have any questions during the call that come up for you, please use the chat function, and that's pretty easy to find at the bottom of your screen. So with that, I'm just going to allow Ty and Mike to introduce themselves and get going with their presentation. All right.
Good morning. I'm sorry, I was stuck on mute there. So again, my name is Ty Nebe. You did pronounce my name correctly, so thank you.
Great.
I am with Plumas Bank. I am the Senior Vice President and handle the Sierra region for Plumas Bank, and thank you for having us.
Yes, my pleasure. Let's see, Mike, it looks like you are still muted, my friend.
Hi, everybody. My name is Mike Hicks. Can you hear me now?
Yes, loud and clear.
Okay, good. So I joined Plumas Bank about 2 years ago. Have been in banking in the Reno Sparks market since 1981, and actually I'm a Senior Vice President and Commercial Loan Officer working the Lake region. So we have branches in Truckee, Tahoe City, and Kings Beach. And I help out with those branches on the lending side as customers need loans. Happy to help customers out in that area.
All right, fantastic. Well, thank you both again for being with us and for introducing yourselves, telling us a little bit about you. So go ahead and please let us know what you've got for us in terms of COVID-19 banking advice.
Yep. Do you want me to start, Ty?
Yeah, that's fine.
Okay, great. So I'm here to really talk about the credit side of lending as it pertains to customers seeking loans from financial institutions in general. And as a junior loan officer, sometimes the first things that we're taught moving into becoming a loan officer is what's often referred to as the 4 C's of credit, the 4 capital C's of credit. And those are important for loan officers as they look at potential lending to customers. And sometimes it's referred even to as the 5 C's of credit. And I'll kind of just walk through those pretty quickly. But we'll start with capital. Capital really references the equity, the cash that the business has, and in fact, the cash that they might be putting down on whatever they're purchasing. So the bank is going to be looking to lend money, but what sort of money, what sort of cash is the customer coming in with to make a down payment or have equity in the amount that, or the property or collateral that they're looking to buy. And I made reference there to one of the other C's, the collateral. So the financial institution is going to say, what is the collateral? You know, you might go to a bank and say, hey, I need to borrow money. And the loan officer is going to say, well, what is the money for? And what are you needing the money for? And in fact, what can be put up as collateral for the loan? So it's very common, and we're probably all more familiar with, let's say, an auto loan. So the money, you're coming to the bank to borrow money to buy an auto and a car or truck. And the bank's going to say, well, we're going to take title to that vehicle as collateral. We're going to ask you to put some money down on the vehicle, and that represents the capital portion of that loan. And so that property, that collateral could be a vehicle, it could be equipment for your business, it could even be the property that you work in. Your owner-occupied commercial real estate would also be held as collateral with the capital as that down payment. Another C is what's commonly called capacity. So the loan officer capacity really makes reference to what is the availability or the capacity of the business, in this case, to make the payments to cover the loan that we're looking to borrow. So does the business have the capacity to make the payments? And that's a vital, important part of the credit decision. One of the other C's is often referred to as conditions. So what are the conditions? What's the purpose of the loan? What's the amount involved? What's the interest rate? And in fact, what's going on in that business customer's industry? What's going on in the outside conditions that would help us to determine whether the future repayment is going to happen. And the fourth or fifth C now in this case is credit. And I'm ending in credit because credit is really important, because the financial institution needs to look at the credit history of the borrower. And oftentimes we will take a look at a credit report and really take a look at what that credit history of that borrower is. So none of us really have the ability to predict the future. We look at a borrower coming in who needs to borrow money to facilitate their needs. And the repayment of that loan will come from the future earnings that the business makes and the future repayment of our loan. We're lending money now, the repayment will come from the future. So the bank has to use those 4 or 5 C's to try and really, in fact, guess what's going to happen in the future. And in fact, for a lender, the best guess that we can use is to take a look at what's happened in the past. So that's why when financial institutions, when they ask you for historical tax returns on the business, historical tax returns on the individuals, they ask for a personal financial statement. What we're doing is gathering tools to help us try to literally guess what's going to happen in the future. And again, the best guess of what's going to happen in the future is what's happened in the recent past. And that's the importance of a credit report, because a credit report will tell us, it provides a summary of what that customer has done in their past obligations, their past contractual obligations. So credit report provides us information about whether they have made their payments, whether they understand the importance of signing a document, understanding the importance of being able to needing to make those payments on a timely basis. And the thing about a credit report, while it reflects that, what it also does is it only will show us what has been late over 30 days past due, and also bankruptcies and liens and judgments. But from a credit standpoint, it reflects past dues as they're categorized by being 30 days past due. So many customers out there might, what's often called writing the trade. They have term agreements with their trade customers, and they extend those. They may extend the repayment of those agreements with those trade vendors. Well, it's important for us to know whether they've gone beyond those contractual agreements. So my honest advice is, as you look at your personal credit, you understand you might have a 10-day grace period or a 15-day grace period. And if you really need to, if the cash flow coming into the business isn't timely enough to make those payments within the period of time that you need to make them, do whatever you can to not let it go 30 days past due. Because when you let your credit, an agreement with a financial institution, a credit card, whatever's going to be on that credit report, if it goes beyond 30 days, that's when it pops up on the credit report. So that's really, as you think about credit, as you think about your past credit and your future credit, those are the important factors. And it's one of the most important, quote, C's of credit that a financial institution will look at as they make a determination whether they're going to go further in being your partner and lending you money. And I'll take some questions certainly after Ty completes his presentation.
Thanks, Mike. And all I can say is welcome to 2020, the most strangest year, I think, in history of banking. From that standpoint, there's been a lot of unknowns, and there's still a lot of unknowns ahead of us. Hopefully, I can bring some certainty to some of the things that you may be dealing with on a daily basis. But it really goes back to the basics, what I call the basics. It's, no matter how big your business is or how small your business is, it's extremely important to build your business team. And your business team is comprised of what I call four essential components. One is your banker. Number two is your investment broker. Three is your accountant, and four is your attorney. And that's not in any order, but those are the four main business partners, or business team members, I should say, business team members that you should have built or working on building those relationships with those four individuals. And why it's so important is because during good times, good economic times, and bad economic times, there's always opportunities out there to either grow your business, expand, acquire, or even sell your business. And so every one of those individuals or institutions will play a role in any of those parts of your business. So it's important to have those relationships. And I think a lot of people found out that during this pandemic and going through the PPP application process, those that have built those relationships received their funding in an expeditious way. Those that didn't struggled through the whole process. And so you're seeing some migration in the banking industry of clients looking now for that type of relationship, which I think is important no matter what type of economic cycle that we're in. The key, I think, going forward for a lot of businesses is to be able to look outside the box. You may have been able to deliver your product in a certain way in the past, and it's really time to really sit down and focus on different ways how you deliver your product to your clientele. For example, restaurants. You might have been a sit-down restaurant in the past, but you've seen restaurants get creative and figure out how ways that they can either do curbside pickup, delivery, to get their food to the clients. So there's other ways, whether it's a take and bake type of operation, but you're going to have to sit down and get innovative with how you deliver your product to your client going forward. And that's going to be a question that will be asked not only by banks, but also by SBA going forward, is to make sure the business owners or the business understands that they have to be flexible in these times and be able to not only work within their own organization, but be able to deliver their product to whomever their client base is. Being able to address uncertainty in the future holds all businesses, or for all businesses, is important moving forward. Any business that isn't changing and isn't thinking about a different future for itself is unlikely to be open and operational in the future. So that's an important thing to think about is, for longevity standpoint, how are you going to survive pandemics? There could be, other pandemics in our future. That's probably the case. So I don't want this to be the norm. Not like a lot of us don't want it to be the norm, but we have to be able to adapt to different type of situations and quickly. And that's going to be the key to the success of a lot of businesses. The ability to track small business closures due to COVID or a pandemic shutdown in the economy to try and make a determination how this has impacted small business is almost impossible, because there's a wave of silent failures that go unaccounted for, and that's due to they didn't file bankruptcy because they didn't have any debt. You'll see large companies file bankruptcy because they're typically leveraged, but there's a lot of small businesses, they're mom and pop operations, they didn't have any debt, or they were 2 years from retirement and they closed. So to really measure the impact of a pandemic is really difficult, and I've been trying to do a lot of research on that to see on industries in particular, to see how the impact of the pandemic has impacted those individual industries. But it is very difficult because you have a lot of people that are just, and businesses exiting the market because they can, one, because they're getting ready to retire, or two, they decided they're going to go do something else. And so that's hard to track to see what the true impact is regarding COVID-19 or any other type of pandemic. Taking advantage of historical low interest rates, I think, is a critical part in these time periods, whether you're refinancing existing debt, expanding your operations, or making the transition from tenant to owner occupied. Right now, the SBA monthly rate as of October of 2020 was 2.43%. That's unheard of. I've been in the banking business 29 years and I've never seen rates this low. So again, opportunities. Here's your opportunities to those small businesses, is to really look and say, does it make sense for me to refinance my debt? And SBA has some programs for those small businesses that they will refinance existing debt, which is something that the 504 program hasn't done in the past and is a newer product that's out there. So something to look into as well to take advantage of those lower rates. The same conditions that have brought interest rates so low, widespread economic disruption caused by the pandemic, also will bring hard questions that you will have to be prepared to answer when you go to apply for a loan. So not only from the bank standpoint, but SBA is going to be asking those hard questions too. What are you doing to your operation to survive? How many employees did you have at the start? How many employees do you have now? What changes did you make to your operation, expense-wise, and what changes did you make to your operation from a delivery standpoint? Those are all going to be important questions and something that business owners should start thinking about as it relates to where they want to go or where they see themselves in the next 3 to 5 years. And that, leads me to the next point is, it's probably a good time to drag out that business plan that you wrote maybe 2 years ago and refresh it. It's probably a good time, if you didn't write a business plan, but you had a great idea and you started a business and you were successful, it's probably a good time to maybe sit down and do that business plan and focus on exactly what you want to get accomplished, because really a business plan is a roadmap for success. And so from that standpoint, it enables you to sit down and focus on the things that are important to you and your business and your employees, which are all part of the succession plan. There are many ways that you can look at things as it relates to, maybe it's a new product that you need to bring in to help the business during this time period. Maybe it's a diversification of yourself in terms of opening yourself up to different market sets. So those are all things that need to be thought about, and now's a good time to sit down, and as we get prepared to go into 2021, this is the perfect time to sit down and do your budgets and get those business plans prepared so that if you have an opportunity to either acquire a competitor or to expand, it's already in place and ready to go because your bank will be asking for those types of things. There is a lot of talk about a potential round 3 of stimulus or PPP funding. However, right now we don't know, anything about it, what it's going to look like at the present time, and who's going to be eligible for that funding. We will continue to monitor that. We'll see. Obviously, the election will determine a lot of direction for a lot of people. Unfortunately, to me, I think business is business, and we should be doing business in this country. But at this point, we don't have a lot of information, so I was hoping to bring a little bit of information to the table for those that were potentially looking at that. But at this point, we know as much as everybody else does. And lastly, to sum it all up, I cannot stress the importance of having that strong business team. Somebody that you can pick up the phone and have a conversation with that impacts your business decisions on a daily basis is important. To have that sounding board so that you can call your accountant and say, what do numbers look like this week? Or your bookkeeper. Reach out and contact your banker and say, look, I'm struggling in receivables at this point in time. What can we do to bridge that gap until I get there? And Mike alluded to that as well, as the credit part is extremely important because that's going to determine character. What is a person's character and ability to stand when and to be able to make payment when things are tough? That's when you have to be able to have that relationship with your banker so that you reach out to them and have those conversations prior to getting yourself into a position where you're 30 days down. Most banks and bankers will be able to help you if you're proactive in your communications. If you put your banker in a reactive or an act to react to something, they're less likely to help you. So be proactive and communicate, build those relationships. It's very important in order for you to succeed within you and your business, and obviously, and ultimately your family will benefit as well. So I will open it up for questions at this point.
All right. Thank you so much, Ty and Mike, for sharing your expertise on both these issues when it comes to credit, when it comes to the 4 and or 5 C's of lending, and also when it comes to your advice about building a business team. Crucial, vital advice. Just a reminder to everyone on the call, and actually some good news, since we've got a little bit lighter attendance, we've got about 13 folks on the call. If you have questions for Mike and Ty, we can probably get a little bit more granular. So right now is the time if you have any questions for either Mike or Ty in regard to anything that they said or anything they didn't say or anything that is just on your mind as a business owner in general, please use chat in order to voice those questions and concerns. I've got a couple of follow-up questions for you guys, if you're willing to take a couple of those. One, and either one of you can answer any of these questions. That's totally acceptable. But Mike, when you were talking about current conditions, market conditions, we hear a lot about historically low interest rates. What are some other market conditions that you can point to when it comes to things a business owner can look at in order to determine whether or not it's the right time to refinance, whether or not it's the right time to take any sort of step in their business, whether it's expansion or otherwise? What other markers can you tell us about current market conditions?
Personally, I think as we look at the business coming in, longevity is a huge factor for us. A business that's kind of survived the recession, I think is teaching those owners, those managers, that they've already got the lesson under their belt as far as what they needed to do to survive a challenging time. And here we are back into another challenging time. And Ty's point Ty's point about opening up that business plan, kind of taking a look at where they're at now and looking at the future and trying to figure out, wow, maybe we need to look at diversifying our business at this time. Maybe we need to figure out where some other sources of revenue that we can look at to continue to grow the business. And we're seeing a lot of that. You know, obviously you have the challenges of typically the business's two highest costs are for the facility that they're in, and of course for the people and their employees. And I think generally in the exact opposite order, they sit there and go, okay, wow, we're going to have to cut employees. It's a really hard pill to swallow. And in fact, there's a point where they just can't do anymore. And I like the idea of really taking a look at the facility that they're in, and perhaps, as Ty alluded to, the quote conditions, meaning the economic conditions have created these dramatically low interest rates, that in fact a closer look at their cost of their facility by maybe either refinancing their facility, or they might be paying rent, and in fact with a minimal down payment, they can turn that rent into equity, into a payment toward actually owning their own business, owning that facility at a much lower rent rate than they're paying right now. So those are the things I think businesses don't necessarily look at. And as Ty talked about, having that great relationship with your banker is so important, you know, and especially, I know Ty and I both talk to individuals, business owners who come in and say, you know, these are some of the conditions I see. I see some diversification this way, but it's going to need a piece of equipment. I understand there's some huge benefits because of the lower interest rates for me to perhaps look at refinancing my own building. And the bankers, us, we come up with a lot of questions. We say, you know, we really delve into, and in a lot of ways, some really personal questions, and in a lot of ways, some challenging questions, some really challenging questions, forcing those business owners to say, you know, and sometimes their reaction is, wow, you're, you know, and in a lot, what gives you the right to ask me, what gives you the right, banker, to ask me those really intricate questions? Well, the fact is, we care. We are maybe challenging that business owner with some tough questions because they're coming to us to be their partner. They're coming to us to help them grow by giving them money to help grow their business, or in fact reduce their expenses by giving them the availability of owning the building that they're operating out of. So in fact, when you go to the banker and you think of them as your potential partner, the partner really is entitled to ask those tough questions, to really challenge them. And the business plan is intricate. It's so important. And right now, as Ty mentioned, right now is absolutely the time to be looking at your business plan and to say, wow, I have all these things coming at me. How can I answer that? How can I continue to grow this business, to continue to make it profitable? And in fact, the tools to help you are your banker, your CPA, your attorney. Those groups are there to help you. And in a lot of ways, that's the difference between a community bank and a non-community bank, is, you know, trying to think about, wow, do I have the comfort level to pick up my banker, to pick up the phone and call my banker at a big bank? And are they willing and have the time to spend 15 minutes, even a half hour on the phone with me to hear me out, to listen as a true invested partner? So, you know, that's a huge difference right now. And I've always said, you know, really get to know your banker. You know, you're comfortable, maybe you're comfortable with your bank, you know, you've been there for a while and you're okay with it. Well, that's great, as long as you know your banker, as long as you have that comfort level with the individual behind the doors.
Right, absolutely. Thank you so much for that response. And what I keep hearing, and what I think I'm gleaning from what both you and Ty are saying, is that right now for business owners, I think sometimes we get into this black and white thinking that says, okay, these are uncertain times, so I'm either going to be overly cautious and lock down and, you know, shore things up and not take any strategic risks, or perhaps I'm overly courageous and I'm taking advantage of, you know, certain market conditions that perhaps are getting me into investments or expansion plans that are not timely and wise, but because of one factor, I seem to be encouraged to pursue those things. I think what you're saying is that there's a way down the middle, and it's creativity, and that's really where that relationship can help you discover areas where you can take strategic risks, and that's really the name of the game in these uncertain times. So that's fantastic advice. So we've got a great question that just came in from Tim Johnston at the Better Business Bureau. Hello, Tim, good to see you. And he honestly was thinking exactly what I was thinking. So much of what we've heard about during this crisis is not only the importance of having a relationship with your banker and having a long-standing personal relationship with a community bank. Especially, we've seen the importance of localized relationships in community banking through this crisis. We've also seen some disparities arise when it comes to communities that are perhaps underbanked. And I know in Nevada, especially in rural areas, and also Northern California in rural areas, that can be a real issue. So we know that, you know, you at Plumas Bank, you have quite a bit of outreach to some smaller communities in our region, which is proven to be vital. What are some things that you're seeing in terms of giving service to these rural communities? What trends have you seen? But also, what kinds of things are you doing to close that disparity gap and perhaps get creative about how you're offering your services?
Well, on that, I think there's a couple different options. We've been pointing a lot of people to the SBA.gov, which is their site, to go out and get other types of lending, direct lending from the SBA. NNDA, which is Northern Nevada Development Authority for the Sierra region, has loan programs and grants able to help those in rural areas. So we're pointing them and helping them. If there's something we can't do because of a territorial thing, we look upon ourselves to try and point them in the right direction and get them to where they need to go to get that help. So constantly always trying to update this is old school, Rolodex of contacts where they can go to and get additional help is important. So that's part of being a community banker, is pointing them in the right direction, whether we're able to help them or not.
Right, absolutely. I mean, the mark of a true community banker and true community servant, and regardless of what sector you're in, is whether or not you're willing to admit when you can't help, and, you know, to find ways to serve people in need, regardless of what form that takes. So thank you very much for that. I think another question that came up for me during the presentation, and what I would tell everyone who's on the call right now, if you have any questions, now's the time to get those in before time runs out. So please don't be shy and fire those away right now. Another question that I'm thinking, we talked a lot about, of course, you know, those key components. So monitoring the 4 or 5 C's of credit, making sure that you have established relationships with your business team. Aside from those things, what would you say, given your actual real-time observations during this crisis, what are some other markers of health for small businesses, some pulse points almost that you can point to say, you know, these particular markers tell me that this business is in the right frame of mind and is on the path toward recovery, is on the path toward success, as opposed to, you know, perhaps some markers of unhealth? What would you say some of those markers are?
Good time.
Those markers could be a couple different things, and it's a good indication. And I guess the markers that I look at, I hone myself into character, an individual's character, and their ability to handle business. It doesn't matter what type of business they operate, but how they've handled that business through tough and through good times. And it's always important to see, you know, again, how they adjust it, because there's sometimes business owners have got to make those tough decisions, and their employees are part of their family. And so a good example would be, if I could just tell a quick story here, I had a client one time come into me and said, look, my accountant told me I owe the IRS $10,000. I don't have enough money in my budget for the finish out this operating year. And it was an agricultural type of operation. And I informed him, I said, look, you came in here, you brought the information into me. We can try and figure out where we can maybe increase the line or be able to cut some costs in some other areas to make sure you're able to do that. 2 weeks goes by and he comes back in and he tells me that he's been eating a can of beans 3 times a day for each meal because he's trying to save money to pay his taxes. And the next thing out of his mouth was, by the way, the IRS owes me $10,000. And then I was put back in my chair because of this guy's character, that he was willing to sacrifice and make those sacrifices. And I think most business owners are like that. And so to me, it's always about the character and how they take care of business. But I did have to ask him who his accountant was, and you may want to reassess that, because eating 3 cans of beans for 2 weeks had to be pretty tough.
Absolutely. And I think you're spot on. I think a lot of business owners get into that business because they are comfortable putting their own skin in the game. And, that's the kind of grit that I see amongst our small business owners in our chamber membership as well. So I think you're right. I think character is one of those things that perhaps can or cannot be taught in some ways, but life circumstances sure do teach us character if we're willing to accept it. But really the only way to tap into that is through relationship.
Yeah. As a matter of fact, character is often referred to as one of the quote 4 C's
Sure.
of credit, and character, as Ty alluded to, falls really under credit. But the character, a measure of somebody's character is the credit, is looking at their past credit to try to determine whether they understand the importance of paying a bill. However, character goes way beyond credit. It absolutely, it means so much more than just this person's commitment to pay, to make the payments. It's where their heart is, where their mind is, what goes beyond just making a payment on a contract. It is where is their gut in making sure that not only their folks are paid, but the rent is paid, the taxes are paid. That's really the heart of a credit decision, and it's important. And that's where, for a lot of the bigger banks, we hear about credit scoring systems, or it's got to fit in the box. And that's another, huge difference, because in a lot of ways, they don't have the opportunity to sit down with the business owner and really understand where their character is, where it is. It's more than just filling out a worksheet and putting it into a computer and see if it comes back, quote, passes for the new loan or not. It's so much more important than that. And from a borrower standpoint, that's why you need to understand who your partner is, and maybe even the process for how that decision is going to be made.
Absolutely. And I think that's actually a very appropriate place to leave our conversation, especially since, the whole premise of this call was, how to navigate the banking system as a business owner during these uncertain times, during COVID-19. And strong relationships, strong character are the things in general that are going to be pulling us forward. But we know through economic uncertainty, they are most certainly the things that will be pulling us forward, regardless of what could be coming in the next month or two, when it comes to another tranche of funding or the outcome of the election. We know we have a relationship, we know we have character, and those things that we can lean on. So thank you very much to both of you for offering yourselves up this morning to our members. Just really quickly before we sign off, if someone on the call has a question to ask, perhaps they're just sitting there absorbing all of this information right now, and a question comes to them later, are there ways that they can reach you?
Yeah, they can reach me at Ty, T-Y, period, Nebe at plumasbank.com if they want to send me an email. Or they're more than welcome to call my direct line here at the bank. That's 775-885-1200, extension 3008. Be happy to talk to them.
All right,
Absolutely.
excellent. And how about you, Mike?
Mine is mike.hix@plumasbank.com. And my number here in Reno, I've got offices again in Truckee, Tahoe City, and Kings Beach, but my office here in Reno is a great number to reach me. It's at 775-786-0907, extension 6901. Happy to talk to anybody about any questions they might have. And again, my firm advice is, if you don't know your banker, and I emphasize the individual, that's the next thing you all need to do, is go in and just introduce yourself to your banker. And if you get a weird feeling, if you're not comfortable, then it's probably time to find a new banker, honestly.
Right, absolutely.
Thank
I think this is the time that everyone is finding finding opportunity to I hate to use the P word, but pivot. If things aren't working, it's time to find new ways for things to work, and to, again, not to fall into those those pitfalls of being overly cautious or overly courageous, but to be overly creative during this time. And reassessing relationships is certainly part of that. So again, thank you, Ty. Thank you, Mike, so much for joining us. And again, just as a very quick reminder, all of these calls are recorded, for better or for worse, y'all. They're always recorded, and we always post them to our YouTube channel so that you can review them later. That's something that we think is very important. We want to make sure that information is available in a timely and accessible fashion. So please visit us on YouTube and take a look at all of the Chamber EDU sessions that are available for viewing right now. And with that, thank you so much, everyone, again, for taking time out of your day to be here. And we will see you next time. Have a good day.
Thank you.
Thank you.